There will never be more than 21 million Bitcoin in circulation, and the fact that we are currently at 19.5 million is remarkable. Only 21 million will see it through. Looking at those 19.5 million, you can tell that this network is entirely open. Of those 19 million, 15 million are in what are referred to as strong hands. Over the past 155 days, they have done nothing with their Bitcoin, so they're hodlers. Consider that 15 out of 19.5 are idling, isn't that right? The remaining number is 1.5 million. Just recently, institutions have begun to participate. Our company was one of 11 that received the green light from the SEC to start an exchange-traded fund ETF. Praise be to God, we are doing okay. Consider that. I don't understand. Institutions should force Bitcoin hodlers to sell their holdings if they are serious about getting involved. The current quantity of Bitcoin is 19.5 million BTC as of March 2024, and there are only 1.5 million BTC still to be mined until the maximum of 21 million is reached. Bitcoin, like digital gold, has a basic scarcity element that supports its value argument. Expectedly, the supply dynamics would be significantly affected by the impending Bitcoin halving event in 2024, which will decrease the block reward to 3.1 to 5 BTC. This, in turn, could cause prices to rise owing to increased scarcity. It is becoming more difficult for individual miners to compete with large-scale operations due to the energy-intensive nature of Bitcoin mining, which requires sophisticated technology and hefty electricity. Notwithstanding these obstacles, Bitcoin's essential principles will be protected because of its decentralized character, which keeps it independent of any one entity. We launched ARK in 2014, and in 2015, when we published our first blog, the price of Bitcoin was $250, was it not? Also, we collaborated with Art Laffer to write a paper on Bitcoin. Does this actually fulfill all three of money's functions? And sure, we did so with Art Laffer. We decided to do something with it after receiving consent from a monetary scholar economist. We need to make a strong push with this. From that point on, we continually ran. Although it started off at $250 and has already increased to $43,000 because institutions are only now becoming involved, we still believe it has only just started. Therefore, it's quite thrilling. We have a base case, a bear case, and a bull scenario, and our belief is that it might scale based on those. As more and more organizations get involved, though, the price per coin might rise to $4.5 million or perhaps more. However, the most crucial point to remember when discussing these topics is to brace yourself for significant volatility. As you may expect, there come the hypes followed by the inevitable booms and crashes. The trend line ought to be rising, but you should still get people, particularly the younger generation, ready for turbulence. You basically came up with the term disruptive innovation all by yourself. Can you give me an explanation of that and explain why you think it's so important? As far as becoming MJ is concerned, that's pretty much the way to go. The expression may not have been originated by us, but we are certainly making it our own. Thus, the 20 years that followed the tech and telecom bubble laid the groundwork for all that has transpired since then. I see. Then the crash happened. Because of this, every seed was put there. However, the crash occurred due to the fact that the technologies were not prepared. The expenses were too high, even if they were making some preparations. Here is an excellent example of the second one from 2003 for your reference. However, the first full genome was sequenced in 2003. When we were considering this in the late 90s to figure out what was wrong, we deciphered all 6 billion bits of code in a single human body. For only one individual, that amounted to $2.07 billion. It required computational power for 13 years. Our readiness for the spotlight was lacking. However, the biotech industry played a significantly larger role in that bubble. I see. It was too early for the technology. The cloud didn't appear until 2006. Deep learning in 2012 and transformer architecture in 2017 and 2018 were two major advances in artificial intelligence that did not occur. At the time, the technologies weren't yet prepared for widespread use. However, funds were poured into them in an aggressive manner that was not justified. They are prepared to be showcased today. In the field of life sciences, we are beginning to scale up 5 main platforms: robots, energy storage, artificial intelligence, blockchain technology, and multiomic sequencing. In addition, I am aware. As a result, we think they're scaling recently. However, this is the epitome of sound investing mentality, and it's perfect for me. Fear grips the populace. They make me feel at ease in my role as portfolio manager. After all, I like to put my money into contentious causes when everyone else is so dogmatic about everything else. This is due to the fact that many individuals in the financial sector are worried about losing their employment or their company. They would rather not be incorrect. So you know what? You can't expect to reap rewards if you avoid taking chances. The hazards and volatility are there though, and you must handle them. Put it to good use. In the next 5 to 10 years, the world will be drastically changed by disruptive innovation. In my opinion, the majority of investors lack the necessary skills to carry out your work. First place. One of the reasons for this is that it happened in the early 2000s following the tech and telecom bust. They were already terrified before the 2008 to 2009 global financial crisis made matters worse. I will return to that. A realization dawned on them: the public markets were where their money needed to be. I can't invest unless the market is very close to the S&P 500, the NASDAQ, or the MSCI Global Index. Their response time, according to the set of abilities I honed in an era devoid of spreadsheets, smartphones, and computers. Plus, while we were doing them by hand, my reaction time to the information was much slower. I see, you have to make a judgment fast after taking in all that data. Because it is following an index, the traditional world is wasting that skill. What has already occurred is the whole focus of indexes. Those indexes' top stocks got there by riding a wave of previous success. People won't notice them in 5 to 10 years. If our prediction about disruptive innovation is correct, it will once again turn sectors upside down and inside out. That investment strategy is totally incorrect. So if you're involved in the crypto world, or more accurately, the digital asset world, you're taking data in real time, continuously, every day. Here we are at 24 hours. The opening of the equities markets is at 9:34, although it's actually later than that. It's the middle of the night. In light of this newfound urgency, the entire planet is on high alert. The current value of disruptive innovation in the world's marketplaces is around $19 trillion. These are both public and private. And that amounts to over 15% of the whole. I see. Our prediction is that 19 trillion will grow into 220 trillion. I see. I repeat 10 times throughout the course of the following 7 years. We think the world is going to change that fast, and if you're on the right side of the shift, you can use these technologies to improve your life, your family's life, and your community's life.